Hey everyone, welcome to Lunar Trading. In this video, I'm going to be going over Webull's option trading. This video is for those that are newer to option trading on Webull and for those that may just be newer to option trading in general. I hope this video can help you grasp some of the basics to the platform and to options trading. It's a lot simpler than you may think, but I remember the struggles of trying to solidify a lot of the concepts to it when I first was diving into this space, but I hope this video will help. Now, if you have a Webull account, the first thing that you're going to want to do is get approved for option trading. All you need to do is just fill out an application. If you get approved, then you should be eligible to trade options within a few business days. But let's jump into the Webull option table. So the first thing that you're going to do, so you come down to this little option tab right here. You click right on it, and I'm going to come over and maximize this whole view just so it's easier for you guys. But for this example, we're going to be looking at SPY. You can do it with any ticker that you want. We could look at Apple. That's going to change all the contracts and some of the expiration dates. But we'll just keep it on SPY for now. But if you look at the top, you just see a bunch of these different dates. These are going to be your expiration dates, which means these are the dates that your contracts will expire. So for SPY, it's every 2 days unless it's the weekend. So this one's the 27th, this one's the 29th, the 2nd, the 4th, and all these contracts could be different. But let's look at the 27th of April 2022. So if you look in the middle, you're going to see the strike price. This is the price that a put or call option can be exercised. I'm just going to say this. Most traders I know do not ever deal with exercising contracts. But up here, you can click this tab and you can set it to any amount of strikes that you want to see. So you can go to 40, you could go to 20, and that's going to show 10 in the money strikes and 10 out of the money strikes. But for the sake of this video, I'm just going to sit on 10 just so the whole layout doesn't become too overwhelming for you guys. So that means that we're going to see 5 in the money strikes and 5 out of the money strikes. For you guys that don't know, an in the money option is one with a strike price that has already been surpassed by the stock price, and an out of the money strike price is one where the stock price has not surpassed it. So you can see right here, the stock price is at 416.10. So anything underneath that price, 416, 415, 414, 413. For the calls is going to be in the money. For the puts, that's going to be out of the money. Now when you get to 417, 418, 419, that becomes out of the money for the calls. And for puts, that becomes in the money. It's just flipped on the other side. For you guys that don't know, calls are where you think that the price of the stock is going to go up, and puts are betting on the price of the asset moving down. Now, if we look on the call side, we're going to look at what's called the premium, which is the current market price of an option contract. So this is what you're going to pay the option seller to receive the contract. For example, let's say I want to buy this 416 call, then I would have to pay $2.65 per share. But in one contract, there's 100 shares. So what you're going to do is times 265 by 100, which is $265. And that's what you're going to be paying to receive this contract. On the left side, we have the ask. On the right side, we have the bid. So the ask is what the seller wants. So in this case, for the 416 one, they want 265 per contract. And what the buyer is willing to pay is 261. And then for this one, it's 413. This is what the seller wants. The buyer is trying to get it for 309. Another example is, let's say if I want to buy 418 puts. So I'll look at this right side. These would be considered in the money. And the ask for these is at $526 per share. So you just times that by 100. So $526 is what I'd have to pay to receive this option contract. And we see that the buyers are trying to get it at $495 though. But if you're trying to get the contract right away, then you're going to pay the ask. Next, we're going to look at volume. So on the call side, we can see these numbers right here. The volume shows the total number of contracts that have been traded. And we see open interest, which shows how many contracts that have not been settled or that are still open. It's better to buy contracts that are more liquid. That way you can get a good fill price and it's easier for you to enter and exit the trade. Then if we scroll over, we have what's called our Greeks. So there's delta, gamma, vega, and theta. I'm going to cover these in a different video, so subscribe to the channel if you guys would like to see that. But pretty much these are just calculations that you can use to measure different factors that might affect the price of an option. But an easy one to use is delta. But delta shows how much the price of the option will change every dollar. So in this case, it's 0.54. So you times that by 100, which is $54 for this 416 contract. So every dollar movement that SPY has, this is going going to fluctuate. $54. So if it goes up, if SPY goes up to 417.10, then $54 is going to get added to this. There's some other factors that go in it as well, but that's a huge one. Now let's say we want to buy one of these contracts. So we're going to go with this 416 call. We just click right on it. Right now it's on sell, but we're going to switch that to buy. You can do that by clicking right there, or you can do it just over here, just clicking on either one. In this case, but we're going to buy it. I'm going to do a video in the future going over what selling an option looks like. That's where you receive the premium, so the price that's paid for the option, but more on that in the future. So subscribe to the channel again if you want to see that. But for buying it, so we can see that they're asking for $265 to $265 to buy this contract. So we'd set this to $265 if we're on a limit order. So that shows down here, premium paid is $265. So right here, that's going to show you that that's the max amount you can lose. You can also go up to this chart and can see kind of what that looks like as price moves down. So if you look up at this gray box, so if the price start to head down, the most that you can lose is $265. And if price start to climb up, then the amount that you can receive is unlimited. Let's switch back to the table. So there's different order types that you can do. This one's set on limit, so that for you guys that don't know, it'll tell you right here, a limit order is to buy or sell stocks when the market price reaches a certain price or better. Limit orders help to lock down profits, but do not guarantee execution. So you can switch it to market. A market order is to buy or sell stock at the current market price. Due to market fluctuation, the market price might change when the order waits to be filled. So as you can see, that option to set the price that we want disappears because it's just going to buy it at the current market price. And you can set it on stop. It also has a description for that and stop limit, but we don't need to go into those. You can also set right here how many contracts you want to buy. So in this case, we had one, so which is $265 for this 416 call. So let's say we want to up that to 2. That changes to $530. Let's say we want to up it all the way to 10. That changes this to $2,650 that we have to pay to receive 10 contracts. And by executing the order, you just come down here and hit place order. But that's pretty much the basics when it comes to option trading on Webull. If you guys appreciate this video, subscribe to the channel. If you guys want to get in on my trading alerts, link in description to join the Discord. Today I alerted 2 different plays, where one you could have profited over 30% on some SPY calls, and another one you could have profited around 20% also on some SPY calls. There's a lot of great people that you can chat with too, and some education in there as well. But take care, everybody.